been a little while. I decided in the kind of rewriting of my week here that I was going to do Saturday and Sunday for live charting and kind of market overview videos. This way you guys can still ask me your questions. We had a lot of you asking if we could do these live sentiment analysis videos again, though. Thank you all for joining us. I really appreciate that. We are going to be going over just a few of the price points, some of the technicals, and then I think I'm going to start off today with just some of the fundamentals in the news that we're seeing. Not that I really count news as a fundamental, but in a pandemic time, these ever-changing atmospheres are extremely important to keep an eye on. So if we dive in, and where were we starting? Oh yeah, I figured we'd start with the Federal Reserve's balance sheet, just to keep an eye on this. Printing money in such an accelerated rate hasn't been seen before. So we're in uncharted waters. Yeah. So here we have back in 2008, around 800 billion on the Fed's balance sheet, and then after 2008, up to 2.25 trillion, right? So they would call that 2,200 billion. Yeah. 2,200 billion. And then over here again, we wrote this, all the way into 2016, 17, 18. They just kept printing money. Mostly we had a drop off here between 2014 and 2019. So they say. That's what they say. Who knows? I don't necessarily believe I trust them, but let's for just all argument's sake, let's say, okay, cool. They weren't printing between from 2014 till 2017, and the stock market just rose off sentiment. And then here, coming into the pandemic, we see the CARES Act at approximately $2.5 trillion, or 2,500 billion. Sounds ridiculous. And then the recent HEROES Act again pumped in another trillion there very shortly after. This type of unfettered money printing is just going to have dire consequences on the system. How long that takes? After 2016, I really started to question whether it would happen quickly. There might be another 10 years of potential for them to just exacerbate and totally debase the monetary system. And one of the reasons I've speculated this might be the case is because we have like 4 billion people on the planet that don't have access to internet and the information flow. We have half of the world's geniuses, essentially, we're not really communicating with on a global scale. And they're probably a lot of very helpful people. So one of the things I've speculated is that intellectual capital is more valuable than just money itself, right? Money doesn't actually hold any real value, especially when we see they can just print it and give it away. So the reason why people want money is for goods and services. And the reason goods and services get made is because they're either aspiring entrepreneurs who, through all the risks that might head their way, they manage to overcome the obstacles and succeed, or people that create artisanal products like your local cheese, yeah, or like Lark's Nut Cheese in New Zealand. Shout out to Lark. Go crypto Lark. Anyways, point of this, the value comes from the people's ability to intellectually produce something, and then from there, that's what we've been capitalizing on all this time, and that's why assets have value. So this brings us into what they've been doing is printing money, essentially, digitally, just writing in a balance sheet now in a ledger. They don't actually have to print cash. That would be a big waste of money for them. And they've been buying up corporate bonds in the background, which into itself is absurd because it means the United States Federal Reserve is buying the corporate infrastructure of the United States that's currently failing. Never a really good idea to try to bail out failing companies. You would normally want to invest in the companies that are successful, but what do I know? Silly investing, right? Anyways, at the very bottom, maybe at totally distressed asset prices, that would be a good move. But at over market value, I don't know if the Federal Reserve knows how to play these games. It doesn't seem like they do. So let's just assume they're going to continue to do this. They're going to continue to print money. They're going to try to do things like go negative interest rates. We've heard some of those conversations come up, and in some countries, they're actually doing that. These all bode positively for us, and it raises the question, what is this going to do to commercial real estate, residential, or maybe even productive real estate? Say my property here is a farm, which we can produce food, limes, right? Avocados, pineapples, delicious items that we all like to enjoy. I'm sure of it. So are there different layers of value? And the first question is in the commercial real estate area. It seems very unlikely that this is going to make it through the storm very well. I think a lot of people who have spent their lives working in Silicon Valley are now starting to question, why am I living so close to work? Telecommuting, essentially, where I just have to log in on Zoom, is going to be the new workflow schedule, and commercial real estate prices will likely fall. But over the last few years, what we've seen is consistent price rises. And this, in my mind, has always been a question of, are we seeing inflation in real time? So yes, I do believe we will see a price drop, especially in commercial real estate. Residential or productive real estate may actually continue to increase because we're seeing an inflation of the money supply, which will inevitably inflate assets. And at one day or another, it will come smashing home to roost on the price point of the individual. Although we're not really seeing that yet, we do see around 11% increase on goods on average from the big order retailers. So it is a noticeable blow in the front end, but more so, I think, importantly, the assets in the back end are being inflated to these astronomically high prices, which they probably shouldn't be at. Hence, I think this is why the reason Elon Musk came out and said, I don't think Tesla should be that high. I think he was insinuating that I don't think the entire stock market should be this high. We are rallying, and that brings us to our last kind of two thoughts here. We are seeing big companies, global ones. Hertz Global Holdings, car rental company, is filing for bankruptcy. Apparently, the car rental company founded with over a dozen Ford Model Ts over a century ago. See, these are old business models that are now hitting the dirt. This is going to leave big gaps in different verticals, but it's also going to create a massive area of opportunity. I'm very excited to see this type of stuff. I do hope that the Federal Reserve just doesn't bail out all the failing companies. Again, globally, they can't. So here we have Avianca. Bankruptcy is so Avianca is an airline from the Latin American area. I think it's Colombian originally. Yeah, Colombian airline. Perfect. Not perfect that they've gone bankrupt, but this is the big airline. This is one of the airlines I normally use if I'm going to fly to visit other countries in Latin America. There's nobody to bail out Avianca. This is a big blow to the Latin American travel industry. And again, I don't know what the wiping out of these verticals are. The American Federal Reserve is buying out American corporate bonds. There's a lot of the chunks of the other parts of the world where the supply chain is going to get held up. And this is where I think it really starts to get interesting, is the long-term understanding of what this does to the supply chain and how people travel. I think another big thing that's going to come into play here, which is an industry to keep an eye on, is telework. The fact that I have fiber optic internet in Costa Rica, where I can grow my own food, I can run off solar, the infrastructure is fantastic, and it's fairly cheap to live out here. I think a lot more people are going to be looking for these rural type settings, and I think countries are going to bend into that idea, offering to help pay for either extended visas, maybe lotteries for residency, all sorts of fun things, tax breaks for companies to move there. We're going to see a whole plethora of new opportunities for international travel and international work, although this will probably take 2 years to really come to fruition. We're early on enough to see some of the initial headwinds of what this means and how countries try to attract aspiring entrepreneurs. I think the other thing here that's interesting to remember is that now companies are going to be much more agile in the way they hire. They're not going to be necessarily looking for someone that's just in the downtown area of San Francisco. They might be able to say, hey, well, look, if we can find a developer anywhere in the world, let's just hire them because they're qualified and they can do a good job. So let's go global. And I think more and more we're going to see this international business scale. And this is where I start to wonder how deflation plays into the story. But with that in mind, let's drop into the technicals. I'm also going to see if I can see what you guys are writing to make sure the stream is even working. It's been a long time since we've done the live stream, so I'm not even sure if they work. YouTube's. I see YouTube always gives you this flack where if you don't keep up with it, they like put you in the penalty box like a bad hockey player or something. It's a little disconcerting, but what can you do? We have shout out to Joe Rogan for going to Spotify. Smart move. Huge moves in Spotify after that too. What was their market increase? Let's actually start with Spotify. I was really proud to see Joe Rogan walk away from fucking YouTube, man. I mean, I love YouTube. If it wasn't for YouTube, I didn't have this platform. But at the same point, they really didn't understand the value of their creators, and it was very noticeable in everything they did. So, just look at this nice spike for Spotify. Now what a box range it was trading in here. a 40% box range, Jesus. And then we had a 60% rise off the bottom here from March. That's pretty good. But even off the box range, we're looking at another 20 to 30%. It's a huge for Spotify's market cap. Currency.com. I hope this is the proper place to put it. I remember when they first did Zoom. For those of you that saw this, there was a huge Zoom Technologies, which was on the OTC pink sheets, and people bought this thinking it was actually Zoom, not realizing that for some reason the brokerage automated showing the Zoom pink sheet at the top instead of Zoom Video Technologies at the top. So people end up looking at this extraordinary explosion in price here from, where was it? Let's go from here, March. No, this isn't it. This is anyways, unimportant. Let's start with Bitcoin, all of everyone's favorites. At least in our family, I think the traditional markets are going to be really interesting to watch over the next few years because, again, they hold value here. It's the dollars that are being inflated. So technically, asset prices going up is a fairly good indicator that that's what might continue to happen over the next 10 years. So all asset prices may be inflated through the area of money printing, especially if all governments are just taking out more debt. Seems kind of likely. I don't know. I'm young. I'm silly. I'm just making guesses. So far, so good. Although in 2016, I thought we were crashing. I thought we were breaking down to like below 2008 levels. I was wrong. I was really wrong on that. And I'll show you, we'll look at a few places where I was wrong over this last year as well, because we're going to look at gold next. But anyways, Bitcoin here finding support on the 0.618 line of the Fibonacci. I know a bunch of you will be glad to see me using this indicator again. And on these longer time frames, as I've dropped into a different bit of a trading strategy, as some other things are taking the current side burner in work. So trading strategy goes to a much more passive area. Looking at Bitcoin here, I would like to do one of two things. I would either like to move into a long-term long position as we find clarification that that's what's going to happen, or I'm going to go into, basically just a hodl position here with consistent what a lot of people like to call dollar cost averaging, which to me is just buy whenever you can and whatever feels suitable for your workflow and your liquidity space, essentially. So it's up to you, but just keep acquiring assets. I think that's a good tagline for anyone that's new to the space. Just keep trying to acquire small amounts of assets if you're especially if you're new. Start off if you're say you're a 25-year-old kid, you're working a job, you can save an extra $50 a month. Start buying some assets, get that account open, and really play around, because it's over the long term that these things become very exciting to play with. So Bitcoin finding support here is nice. It could equal a bullish move, and then I would just ladder into my long-term long position. If not here, if we fall below the 618 line, again, whether we support ourselves here at 7 down would become critical. But currently, things look okay. We might actually come down to the 0.5 fib line, make a big inverse head and shoulders almost over 6 months, which would be a very nice chart pattern to see here. We saw the big head and shoulders and a collapse downwards again on actually both sides of Bitcoin here, both those times. For those of you that are in the private bear members group, this is where most of the charting is being done lately. It's just easier to keep a cohesive group of people that are willing to put skin in the game by paying for the private community and the newsletter. We just get a higher level of conversation, so that's where we keep most of that. But I did decide, if you look over here you can't see it, but on my whiteboard, blackboard, drawing board, such a weird culture we live in nowadays, Jesus Christ. It says Saturday and Sunday for live charts, ladies and gentlemen. So we'll just go over market sentiments. So currently with Bitcoin, I'm just looking either for a long-term long position or I would short the market if we do break through the areas here. But currently, I'm not trying to actively trade too extensively. There's just a lot of other things going on. Although there are some great trades that were made over the last few months as well. Shout out to the Bear family members that were trading Theta and T-Fuel. You guys did good there too. Our Digibyte trade, I haven't actually been online since any of that. The Digibyte trade that we had been looking at in the private Bear Den went up on average, at high 300%, on average about 40 or 50%. I think we took our initial entries between 150 and 110, area, right around this red line here. The fact that we went down to 50 was just, I picked up a very small amount there. I was not really doing anything. So this nice high is good. I don't think it's done though. Digibyte is looking for a close, hopefully above the 200 moving average here on the weekly. That would be really nice to see. If we go down to the daily though, we are still again trying to find support above that 21 moving average to look at a continuation of the rest of the waves. I have for those of you, again, that would know, I've speculated that I thought fair market value for Digibyte, we can argue however you might want to try to address that conversation, but to me is somewhere around 700 Satoshis. So I think is a highly undervalued asset. And to me, I look at these all as kind of like Bitcoin, like in the Bitcoin family. And I think all of them are valuable. They're going to prove their use cases over the decades to come as people look at investing in different styles of infrastructure and ways to use this technology. It's always the way it's been, right? There's not just Gmail. There's all these other mail servers that you can try still. And we need that for a healthy market, even though most people use Gmail. Right? There are always other options, and those also do well, right? So it's keen, and it's of a keen mind to keep an eye on all of them, especially when they have so many similarities, less differences. Again, we could get into an argument because I'm not a tech person. Maybe there's a issue like huge, stark, contrasting differences that I just don't see. But that's for a technical conversation I wouldn't understand anyway. So to me, I'm looking at it under the same thing. These are in the same family of technology to me, and part of it is understanding that value is a perception-based concept. So the perception of this will change as people find interest in taking their own game plans with how the future looks. So again, things like Digibyte interest me. We had a short little call on Raven the other day on our trading view. We do shout out to Jerry for helping keep up posts there. I really appreciate that, but it was a nice 7 run from around 190 to 210 is a nice 7% gain. Again, on these falling wedges, you don't want to think like, oh, this is the most bullish falling wedge ever. We're going to explode into crazy land. We were watching it here. Yeah, this is where the breakout started. You can go to our TradingView account. You can follow our charts. You can also download all of our free indicators. This is the falling wedge we had been watching. And right when we broke above the 21 moving average on the 4 hour, we see more clearly here. That's when the call came out. Shout out to Jerry for making that such an on-time manner too. Actually, can we go back and look at that? Yeah. Thanks for Jerry for help keeping stock of these. Again, these are all short plays. Here we have our take profit line, which was originally drawn at 208, and boom, came up, hit it. Now we have a secondary profit line up here at 223, which is the resistance of the volume profile, at least on the 4 hour in the visible range of our trade. That is important to understand what some of that means in these indicators, and again, try to keep most of that in the private buried in because it's just easier, but nonetheless, that was a nice little one to see. We go back over, let's see, I wanted to take a look at gold because I made a video, how long ago was it? It was like a year ago, talking about how Bitcoin could go to $600. At that, even still, I'm trying to find out what the sweet spot is about saying ridiculous things, and just, and it's good to speculate. It's always, I've actually been bullish for gold since 2007. That's been my it's a stable coin to some degree, right? Not necessarily bullish on it, but a stable coin that will maintain its value. So in a world where the indicators blink and flip off in random sequences, we could assume that, a chunk of gold would offer the same purchasing power that it has for maybe thousands of years in our history. So it's designed to be more like a stable token than really like a bullish asset. You don't even want it to do that necessarily, like, oh no, here we go, like we're going into massive inflation now. Like, you don't really want that to happen. It's not going to be fun for people, but we're seeing it on a day-to-day basis anyways, and they're not bailing out. So one of the things I wanted to look at was let's see here. Yeah, this kind of big cup and handle. Now, what we need to see here, are we going to form the handle? That's basically the second question here. So it looks, or it appears as though real gold. Let's see, old gold. Yeah, old gold, like the heavy stuff you have to pick up out of the ground. Not Bitgold, Bitcoin, whatever. You know what I'm talking about, ladies and gentlemen. It's Saturday morning at 10:20 a.m. here in Costa Rica. I think we're going to be looking at a potential cup and handle here, and it's going to be confirmed probably by a support test of the $1,500 area, especially with continued money printing. I don't see how else they will solve this. This is a really nice long time frame in the cup and handle too. So I would speculate that over the next, it may take that long. Gold's a slow mover. You could see usually from the cup and handle about 100% move. So somewhere upwards in the range of maybe $3,000 gold by 2022. Let's probably the next part of the year sweep down. This could be even shorter. We are in a very, very volatile moment. So actually that would be a good time. So I'm going to actually take a look at the VIX, or the volatility index here for the S&P 500, just to get a rough grasp of where we're sitting at and how people think the markets are going to react. Okay. So we are now in a negative trend on the VIX, so that's good. That's a good thing to see. I think we'll see that probably up until September. The decreased volatility, I think, for gold will probably will play to the bearish side. The money printing will continue, but the volatility will decrease, and then as soon as volatility increases, it starts to increase again, probably near the beginning of 2021, when people realize that this is a 5 to 10 year process to really rebuild a global economy. I guess that's the other thing I think we forget so easily in the conversation, is remembering that this is a global situation, that companies like Avianca going offline is a big deal for Latin America, and there's nobody bailing them out. All right, so Avianca is going to get bought up into pieces by different people that have assets over the next few years, and they'll probably come back online, maybe rebranded or something as well. So keeping these things in mind is that the entire economy is going through a flux right now. You can't really just think, if United States goes back to work, everything's going to be fine, because that is the furthest thing from the truth. You need everybody working around the world. That's at least how we kept the system going up till now. It's very difficult to see, but this entire thing is very interconnected. We're a very interconnected species already. So that will become prevalent over the next few months, and I do believe that in the long term that will probably increase the volatility. Now, this might be a much shorter handle than I'm speculating. Like, it could swing very well into something like this. Because there's so much, I'm not going to try to predict a news cycle with the pandemic going on. It got here faster than I ever could have imagined, and we've been watching it since late January. So no sense in speculating time, but this would be a beautiful cup and handle on gold, and it could equal about 100% move on average for cup and handles, especially when you have this long-term time frame. For those of you that are new to trading or interested in new to trading, you will be good to know that cup and handles you want to form on a multi-week to a multi-month or multi-year time frame, potentially like we're seeing here. This leads to a much more reliable bullish indicator, and you can trade those with a lot more, let's say, peace of mind. Trading on the hourly or the daily with a cup and handle is kind of it's like a fool soon parted from his money's game. Just not a high probability of that play working out for you. So keep an eye on that. The dollar somehow staying above our previous resistance line, but below the major resistance line. Okay, so that's good. We spiked right up to that major point of resistance here that we've had drawn in since, what was that, 2017. We've had these lines drawn in since 2017 when we first started. I think some of you will even remember this if we zoom out here and look at our total downward progression of the US dollar index here, this long-term downtrend, with lower highs as well, like this. Boom. There we go. So we're actually above the intermediate falling wedge. Like, we could have classified this as a falling wedge. We're above the part of the falling wedge. If we somehow get above 103 and the dollar goes up, we've gone into no man's land, ladies and gentlemen, and we might as well all throw everything in the air, because people don't. I've really started to question, do people need to know what's going on in the monetary system for it to work properly? Because if they can just get away with nonsense, then maybe not technical analysis going out the window, but some of the fundamentals going out the window. So for those of you in the private bear den, You would know already that my speculation here is to keep a close eye on the S&P 500 as well as the NASDAQ, both of which are in rising wedges on a multi-month time frame. Rising wedges are generally bearish indicators. Yep, that's right. Normally goes down after the wedge breaks. How far down? We could say for the NASDAQ here, at least to a buck of 4, right? 104. With the S&P 500, we'd have a secondary wave here, probably around 282. That would be like those are pretty easy standards, but it's on a multi-month time frame, so it could be much lower. But and it does look like we are kind of peaking out here with volume. So this is going to do one of two things. If we break to the upside, we are in total la la land, and I don't trust too much of what's going on in the markets for clarity. What if it just keeps going up? Is that a real sign of inflation like in front of our eyes? We'll have to keep an eye on that as it goes. But for now, this should break down. If it doesn't and it breaks up, we're like Wile E. Coyote running off the cliff. And as long as Wile E. Coyote's not looking down, we may just continue to run, unabided by the fact that we've gone like we should be falling. So I'm keeping a close eye on both the S&P 500 and the NASDAQ for exactly this reason. These both should be bearish signs. And if they break to the upside, all randomness is on the table. And I would also then put Bitcoin on the table for that long-term bull run starting sooner rather than later. Again, the fact that the dollar is still so strong through all of this, I guess, if we can, in here, look just for a rough comparison, CRC to USD. Here in Costa Rica, we use what was known as the colones. So 100,000 colones. Sorry, a million colones is 1,757. So it's around 17 cents or 18 cents per, or 0.0018 United States cents per Costa Rican colone. But as you can see here, the relationship of the two has actually stayed relatively stable. So it used to be much more expensive back here, our colone used to be worth a lot more, and we've been on a downward slide since 2004, and we've been fairly stable here around 18 cents to the US dollar. So we actually haven't had that much inflation or volatility in our currency here in Costa Rica over the last year, which is actually pretty surprising because the volatility in the Canadian dollar, which is obviously a much more closely related set of ecosystems, the United States dollar fluctuated much more heavily, almost like 11%, I think, at some of the peak volatility times. So the fact that the dollar and the Costa Rican colone is staying relatively strong here is really weird to me. And that's why this is why I'm keeping a close eye on the markets to really try to tease out the idea of, have we gone into total la la land, and will we continue? Will we be able to continue that? And I think this is going to be a pretty big defining moment over the next 3 months into September, October, November, December, as we see, again, the long-term realization and the psyche of people really adjust to all these changes in the market, from money printing to the way we do business, to commercial real estate, and the places we might travel and how we will be traveling there, because some of those companies might not be there the way we used to. Anyways, I'll take the last little bit here to answer any of your guys' questions if you happen to have them. I'm not even sure if the stream is working. I didn't get a chance to take a look at, here we go. I can copy the stream and open it over here, and I can find out if this has been working or not. To all these. Yes. Okay. Good. Well, it's been working. Let's see. Oh. Cool. Well, we'll just leave it at that. Again, thank you guys for joining us today. We won't run too far over. There's a long one. We'll do these weekend videos where we just go over market sentiments. You guys can ask me your questions on Twitter, or you can ask them here on YouTube. And then we'll just do that on the weekends. It'll make it easier for the sentiment analysis. We can, get everyone on board on where I'm thinking that, and that way my vlogs Monday through Thursday, and hopefully a podcast once every Friday. Now, see if I can keep up with that routine. That makes at least 3 videos per week, essentially 1 podcast, 1 vlog, 1 live video. Maybe we'll offset on the days we can't find podcasts because getting guests is not always easy, but we have 2 great podcasts in the pipeline right now. One with Dr. Rick Strassman from DMT, The Spirit Molecule, author of that book. Fantastic podcast. We just finished it yesterday. And the day before that, we did a podcast with 2 hedge fund managers from what's known as a DAF, which is a really cool way to get very experimental with the money that you might be giving to the government for taxes if you're a United States citizen or resident, I guess. This is nice. Ulf as well. Good to see you all the way from up north. Gee, sometimes I miss how cold and quiet the forests are, but I'm glad to be in the jungle. Nice to see you, brother. It's been a while. I'm glad to have the live streams back on. Costa Rica here has resumed some type of normalcy. We only have 200 cases of coronavirus, so things are going well here. I'm excited to be here, that's for sure. I hope all of you are staying happy, healthy, safe, and enjoying some of the new opportunities that this brings. Even though there is, a kind of a crisis and some chaos going on, there is a lot of space to be building and growing. So I hope you guys are enjoying that process, staying calm, peaceful, get your hands dirty, plant some plants, grow some trees, and we'll see you guys on the other side. Oh yeah, remember to give us a thumbs up. Can't forget to do the YouTube thing where leave us your comments, your thoughts, your questions down below. You can follow me on Instagram or Twitter or on Facebook. I think I'm on Steemit and Library, although I don't use those things too much. Everyone comes here to watch it, so that just makes it easier. If you guys think I should be switching or doing some of that and you'd like to help do that, cool. Other than that, YouTube is just easy because that's what I'll do. Maybe I'll look at Restream again for the weekend one so we can make sure these weekly market updates go to all of the platforms. Yeah, I'll take a look at that. It makes it easy for you guys too that way if you happen to like. And maybe we're going to figure out how to move to Spotify. We're talking about a new rendition of the podcast. That way I don't mix up the financial sentiments and my kind of wealth and philosophy sentiments with the podcast, where sometimes we're talking to far out PhDs in biology or psychiatry, and I think it's been confusing for people. So we might actually be moving the podcast somewhere else in terms of maybe the Arcane podcast. That way we can run it on Spotify and iTunes and have it a bit more clearly defined as a podcast instead of just whenever I happen to produce a video on Friday with someone else. So keep your ears out for that. Now, the fun thing here is Moonshine Fuel says 200 cases. Yeah, this is actually what I'm going to amount to intelligent governance from an easy move to begin with. We here in Costa Rica locked down really quickly. We don't listen to the United States government or their medical system at all. Everything we get in terms of medical data comes from Taiwan, China, and Korea. So we don't give a shit what the Americans are doing here in Costa Rica, and I'm very grateful for that because our scientific data led us to lock down early, slowing this pandemic to a point where we can basically open up the country again with not too, we probably won't need to lock down, although we'll see how if they let international travelers back in again, and they might not for the next 2 years. So it's a question of how they try to manage. But internally, we are going back online. The beaches are opening, and they're starting to go about runs of how to support local domestic tourism. So I'm not a big fan of governance, but at the same point, my self-governance tactics would be to do the same thing. We are a very interconnected, related community and society. Generally, especially out in countries like this, people are more interested in looking out for one another than in the kind of selfish Western countries where people are much more individualistic and tribal about their own ideologies instead of about their community. Here, where we live as communities, it's a much different story. People care a lot more about the sentiments. So I think we'll actually be able to overcome a lot of the political and politicized problems that countries like the United States and these bigger countries are having, and how to actually deal with such a difficult, rapidly moving situation. Hats off to everyone. It's not easy. None of this was ever going to be easy. We didn't have anywhere to go that was just like, oh, this is a great choice. We had no great choices. They were all difficult choices, and I think we're going to be forced to all deal with difficult choices for the next few years, although I believe it makes us all stronger and much wiser with how we manage our economy. This is going to push everyone into a much more localized area. Production of things is going to come back home, whether you're in the United States and people are producing things in China, that's coming back home. Same here in Costa Rica. We've actually already started to localize a lot of our medicine, and we created all of our own test kits here. We produce hydroxychloroquine here, and we do the test with zinc, and our tests seem to work. And same with the data coming out of China. I don't know why there's such a discrepancy between these two medical systems, but it's really interesting to see that there is a difference. It's worrying to me because as a not doctor, I don't like seeing such stark contrasts in the way something that should be data is politicized, and that leads me to worry that a lot of scientific data for a long time has been nothing but an arm of propaganda, probably at a global scale, but that's not really my concern. I'm not talented enough to understand those areas. So we'll focus on what I'm good at. I see you guys would like me to do a video about buying property in Costa Rica, and I will put that on the top of the list as well. Maybe some more gardening videos, just sweetness around the ideas of answering questions that you guys might have. I love the freedom that I've had with the Arcane Bear to be able to produce all this random content and still have such a core group of supporters. So hats off to all of you. We've made, we're pretty much at year 3 now. It's been such a wild ride. I'm so grateful. Hats off to you guys for making it through all these wild times and changing conversations. If I could leave you with my parting advice today is, breathe deep, be grateful, and remember to sit and close your eyes for a little bit every day. It helps. It's Theo the Arcane Bear signing off, and we'll see you guys again very soon. Thank you. Wait, I'm going to have to mosey around here to end the stream. Bling.